Hello, good morning from a really rather lovely Monday the 21st. I'm FX Blue and this is the market brief. So we have inflation data due out on Wednesday. Expectation is for that to be at least 6% as supply chains are struggling and energy prices continue to roof. The Bank of England has hiked rates for 3 months in a row now. And normally that would have had some effect on inflation by now, but these are far from normal times. And don't forget, we have the increase to national insurance and the higher energy cost cap coming in. So perhaps the Bank of England has done all it can for now. Perhaps the government needs to wade into the cost of living crisis. So step up Sunak and his spring statement. That is also due out on Wednesday, and it will be an update to his November budget. Apparently, behind the scenes, Boris has been piling on the pressure for Sunak to cut the VAT on energy prices. In particular, prices at the petrol pumps, because they really are starting to take the piss. That's because any windfall tax on the energy company profits that may come into play will be more likely used to replenish the country's coffers than be passed on to the consumer. So the UK is all in a bit of a pickle right now. Employment data is still strong, but concern remains that inflation will spill over into wage demands, leading to a wage price spiral and our good old friend stagflation. There may be trouble ahead. In the market last week, sterling staged a bit of a rally. We climbed back to 132.10 against the dollar, but remained pretty flat around 119.25 against the euro. Over in the US, the Fed raised rates by 25 basis points, which was widely expected. There were still pockets in the market who thought 50 basis points might be on the cards, as front loading made sense before Russia invaded Ukraine. But with the level of advanced guidance from the Fed and the uncertainty of the war, it all made the outcome pretty unsurprising. Slow and steady seems to be the way ahead for the Fed right now. As rates continue to rise throughout the rest of the year, the Fed will naturally receive more data and will be in a better position to judge if perhaps a 50 basis point rate hike may be needed later on. The market seems pretty comfortable with the idea of a cautious start, especially with the uncertainty of the war right now, because the Fed can always speed things up later in the year. In the market there, the dollar index touched a high of 99.30, but it couldn't really sustain that rally, and we closed out the week around 98.20. Euro dollar, meanwhile, kicks off the new week from around 110.40. That's it from me this morning. Have a great day. Join me again tomorrow.